Welcome back to Trading 360. I'm Nicole Petalides live in New York City. It's time for the big three stocks, three charts, three trades. And we have an e-commerce theme today. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Mike Shorr, Director of Trading Education at Prosper Trading Academy. Nice to see you both on this Tuesday. Thanks for being here. So Mike, let's start off with your first one, and that is Shopify. Why is this one on your radar? Tell us about your trade.
Yeah, this is going to be one of these, kind of bottom feeder type of moves where we're going to get into Etsy in a little bit, but very, very similar chart patterns, and just seeing that reversal bottom, and then you're just waiting for that first small resistance to hit and go through it. And we're looking at both of those right now. Actually, Shopify looks a little bit better than Etsy this morning.
Right, and I know you're going to look at that Etsy later, but that's the whole idea, Ben, is that the bottom feeder trade. Tell me a little bit about it, Ben.
Nicole, Mike, good morning. Hope you guys enjoyed the long weekend. We are seeing a bid in Etsy and Shop for the most part. A little bit concerned about this bid because a lot of people are getting excited about it, and it's incredible how short-lived our memories are. Oftentimes we've forgotten that most of these rallies that we've seen recently have been sold into. So again, while we're seeing a trend here, as we can take a look at on the 5-minute time frame to the upside, and one would look at this and think it's exactly what the bulls ordered, right? But ultimately, maybe not. This might be more along the lines of an opportunity for the bears to start to step up at some point soon. And I'll show you exactly what I mean here. First and foremost, the 5-minute time frame, the trend higher you've seen from 318 up to 381, so significant in itself, and this is just over the last few days. This goes back to Wednesday where we bottomed out, and with the broader market rallying again, you'd hope to see Shop and some of the other names that we're talking about here today do pretty well, but take a look because it's relatively contained. So this has me what has me a little bit concerned. This is a 60-minute time frame. Don't get too excited about that rally up in the 5 because we have yet to take out the May highs established earlier this month. Still have yet to take out those April lows. So again, kind of lagging the broader market where we've seen a little bit more strength relative to what's playing out here in some Shopify. And then, I wanted to look at the daily time frame, and I'll show you exactly what I mean in terms of potential for a sell opportunity here. Look at the run-up that we saw into $1,762. And I didn't establish the areas of balance on the way up here because they're kind of clouded. It's not really that well-defined staircase type pattern, but take a look at the way down. Here you can see 1, 2, 3, 4, 5, and 6 is what we're currently forming right now. So again, all we really were just looking at was the rally up here, potentially right back to this upper extreme. 400, 410 is the area to watch at this point. If we break above that, it's still a ways till we can really lose the working assumption that this market's trending lower, and that will come up above the middle of that balance area number 5 that forms. So again, yeah, this is significant with the broader market, a rally off those recent lows, but I just want to point out the longer term trend that we've been seeing has been to the downside, and we're only working our way up towards the upper extreme of the mid range that's formed here again near these lows. This is something to watch here, but again, possibly just providing a sell opportunity, not so much a recovering and V-bottoming type pattern.
Yeah, and that's a tough chart there, Mike. I mean, I think Ben really captured it, showing it each one of those legs down and just no recovery to speak of. Is that why you like this at this point?
I mean, I love the company. I love the space. And so this is, basically your two go-tos in this space is Shop and Affirm. And I like Shop a lot better. I mean, it's positioned well. And these high flyers, when they do turn around, you're going to get people who are like, well, I was in at $400. I don't mind, it was up at whatever, plus 15 or whatever. And now, I don't care if I get out at 12, 11, 10, as long as I'm making money. So now we don't have to, great, sell it to me down here. I'll buy it.
Right. You really think so? When you talk about the momentum and the breakout, right? What kind of time frame are you talking about?
So I'm only going out to June, so I'm targeting 4.25 here. So this is only a 3-week trade, not even. So I am not saying that we are going to go make new highs on any of this stuff. Remember, these are trades, not investments for me.
Right, understood, and that's the point too, right, Ben? Before we get to the next one, I mean, he's looking out basically to June 17th here with that trade.
Yeah, no, I completely understand what Mike's talking about, and these stocks have been overdone, just like the broader market. My point is just that it's a counter-trend move here to basically buy into this weakness as of recent. And again, I think the longer-term trend has been in place to the downside. So that being the case, if you're under the working assumption that that's continuing, you're looking for, well, I personally as a trader tend to favor short-sided positions in a trend environment to the downside. But Mike's got a point here. I mean, this is a counter-trend trade. There's money to be made on the counter-trend side of trading price activity, that's for sure.
Yep.
Yeah, understood. Final thought, Mike, on this one before we get to the next?
I guess I would consider this one a date and not a marriage. So let's, I guess that's, just for...
Right, I get it.
Just for the next 3 weeks.
Yeah. Understood, Mike. So let's look at this one when we take a look at Etsy. I mean, you were really looking for a little bit of momentum, a breakout point that you could creep in and get a little bit of Shopify. Is Etsy much of the same picture of how to do this and why it's on your radar?
Same sort of thing. Yeah, same sort. I mean, the charts look, almost scarily similar. But, again, Etsy, somebody who's taken on the likes of Amazon and not only has survived, but, they're still in business, but they're doing quite well, and they've kind of carved out their own niche in this whole e-commerce landscape. Amazon even tried to go against them with their, I can't remember what Amazon called it, but basically, the independent seller, artsy, craftsy type of Etsy stuff, and Etsy just blows them out of the water to that where I'm not even sure that program has any legs over at Amazon.
It's at 81.56 today. What's interesting, too, is your theme here, all these names in e-commerce and technology, basically, right? Ben, take a look here at Etsy.
Well, this is a little bit of a different look when you are diving into the 5-minute time frame, the hourly, and this is actually a stock that's been coming under pressure as of recent. Now, a couple days to the upside here in terms of what we just talked about as far as Shopify, but I wanted to just point out some of the recent weaknesses. We broke down below this $100 level, out of this area of consolidation that's formed roughly, we'll call it 170 down to 129. I labeled this as number 5, and you'll see why in just a second, but my concern here is that we're transitioning from a vertical phase when we broke out and saw high conviction to the downside to a little bit more of a sideways consolidation type, overlapping, rotational, more horizontal pattern. So a pretty good example here of the two separate phases, though, in terms of some of the weakness we've seen as of recent. Here you can see balance area number 1 formed up around the $290, $300 level. Look at the high conviction vertical breach of that lower extreme. Here again, sideways consolidation. You can see this pattern repeat itself over and over again. A pretty good example of how we transition from that horizontal into the vertical phase. And again, we saw a pretty good, you could even kind of identify a smaller area consolidation here. It looks like middle to end of April, we saw some overlapping rotational price activity, but it does seem as if maybe that's what's starting to play out here again. Transitioning again back to a sideways, less conviction, high conviction, less high energy type phase. But I do want to point out as we just take a look at the daily time frame again, but this time let's bring in some moving averages here and some key levels to watch. You can see after a breach of the 200, the 50-day moving average really yet to come back. And notice here again, RSI for the most part on the way down, lower lows and lower highs, never really got into that oversold territory at this point, but something to keep an eye on. Again, another one that's kind of struggling, slight rally back over the last couple days, but for the most part, that underlying trend on the bigger picture remains lower.
Right. And you're watching the RSI as well there, Mike? Is that one of the indicators you watch? What do you watch when you're making these decisions?
I do not look at the RSI. I don't have anything, inherently against it. There's thousands of ways to treat
You look at the moving
analysis.
averages?
Of course, I look at moving averages. I look at volume profiles. I also have a couple of other technical things that I look at. I guess MACD is a great one to look at for this type of move. I like the MACD for this. This I expect to be more of a grinding move up, and really with that front month, or in this case front week implied volatility still pretty darn rich. This is almost like a neutral to bullish play. It's just the only thing that doesn't work with this is if we go precipitously down.
Right, and you talked about the fact that it has the international exposure and the other one had global operations, so you're really looking big picture here. And last but not least, Mike, as we take a look here at Alibaba, I was also reading some reports about at least one CEO thinking that Indian stock market, well, it's Indian and Chinese stock markets could grow fourfold. I don't know if you saw that article, by the year 2050. So a lot of optimism surrounding these groups. I know Alibaba's already had a couple of good days last week and this week, right? Even today I saw the up arrow. Alibaba's on your radar.
Yeah.
Tell us a little bit about that one.
Yeah, so you can almost pair these up with the other two. That you know, I don't have a strong conviction either way. You know, this is not a wildly bullish scenario that we're sitting in, but we've also seen stocks really, really get hit. And so playing this e-commerce thing where Baba's actually looking probably the strongest out of the three, coming up to big resistance, and I really don't understand it. You know, somebody talking about forecasts out to 2050. How about, you know, 50 days from now? You know, the world changes on a dime. So you know, yeah, is there potential in India with you know, with billions of people living there potentially by 2050? Obviously, there's going to be the same thing with China. Of course, there's going to be opportunities. But again, I'm not even looking out 5 months, much less 18 years or whatever we're at, 20 years.
Oh, right. Okay, got
yes.
it. Right. Certainly not to 2050, right? You're looking more like,
Right.
you know, mid next month. You know, and then tell us more about your thoughts here on the Alibaba trade and the chart.
Nicole, this is another stock that's actually in a bit of a balance, in a bit of a range. And, you know, I think it's important to kind of identify the phase of development, because then as a trader, we can kind of pair or establish expectations in terms of price activity, right? I think it's a mistake to kind of approach the trading day and think that you're going to be seeing some type of vertical type price activity established when you're in a range. Take a look at the 60-minute time frame here. Baba established in a well-defined range right now. We'll call it 136, 130 to the upside, all the way down to 72, and you can see again, kind of in no man's land at this point. Now, again, like I say, adjust your expectations based on the phase that you're in, and this is a more overlapping, rotational, less conviction, kind of low energy phase, and again, just sort of meandering sideways for the most part. Now, at some point, there will be a catalyst. There will be some sort of a imbalance that occurs, and we'll shift from that horizontal phase into a vertical phase. We'll break out of this range, simply put. When, I don't know, but at some point, yes. And you can see that play out here. Now, last time we talked about Baba, Nicole, we were talking about balance area number 6 had formed, and we broke out, and we're sort of losing our conviction to the downside around 73. We bottomed out, and we started to go a bit sideways. And I said, are we starting to form balance area number 7? In fact, I drew this with a question mark. I think that we're at the point where we can erase that and change that to an exclamation mark at this point, because we have established a bit of a balance. We're talking 120 to 73. It's very well defined, as is the trend to the downside here. So again, as we continue to establish these areas at lower and lower levels, the working assumption that the market is trending lower, and we're always, again, constantly referencing the middle of the prior area balance that formed relative to the one that we're forming now. So again, we can establish 7 as our new area that we're in right now, hovering around 100. The bears don't really want to see this up and through 125, the middle of 6 here. So we'll call it 125, 130. The bulls, they want to see that because they want to see a reversal of this trend. But you can see down at 96, we're still a ways from the 130 level where you can really establish a reversal is coming into play. Quick look at where things stand relative to the moving averages. You can see it's been bouncing off that 50, struggling to get back up above it. We haven't been above the 200, guys, since we're talking February of 2021. Look at the net or year change here, year to date, down almost 19%. Again, coming off, to say the least here, under pressure. RSI not really providing a lean one way or the other, but this is a third example of a market that's in a well-defined trend environment to the downside on the bigger picture. Tough to get excited about this, tough to buy into it until we start to take out some of that key structure that was established. Again, we identified it as that balance in the middle of balance area number 6, 125-ish, 120-30 area.
Understood. And Mike, you get the final say here. Final thoughts after you saw Ben's charts there. I know you were focused on the 50-day with your call spread.
Yeah.
Tell me a little bit your final thoughts, Mike.
Yeah, so I'm playing for lack of upside. So I think the 50-day is about 97 quarters, somewhere in that neighborhood. We're sitting about there right now, or at least we were before we went live. So I'm selling the $98 call spread. You should be able to sell that for 90 cents, maybe even the dollar, in which case you're risking the dollar to make a dollar. So just a lack of further upside. You know, we do fine if we sit here. We do fine if we come back down. Just, you know, and then we lose, you know, as much as we potentially gained if we go through the 100 level. But then my Etsy and shop are going to do really well. So.
Good to see you both. Thank you so much for the big three today. We took a look at Shopify, Etsy, and Alibaba. Thank you both very, very much on this Tuesday. Appreciate it. Mike Shorr, Director of Trading Education at Prosper Trading Academy, and our own Ben Lichtenstein. Thank you both for being here.